Hello everyone, in this video I'm going to be going through order block part 2. We'll see how if you have a lot of order block you have to choose the right one, or if you want to choose order block based on a Fibonacci level. I'm going to be explaining everything in this video. So let me take Euro USD, let me go to the 4 hour. This case, I'll talk about the Fibonacci first, and after I'll come back to the order block. The Fib level, this is the Fib. The Fib you have a lot of level. You take the Fib, you start from here, you extend, you click, now you click on the setting. Once you click on the setting, then these are level you are supposed to put. I even sent to the Discord chat, so go to the full SMC Discord or full SMC room, try to have the same level as I have here. You can still change the color, it doesn't matter. So once you have everything, then it will look like, and here you have from the 50 to the downside from this area. This we call by, let me put it to be let me put it to be blue. Let's say blue. From this level down here, that's where you call it, we talk about discounted zone. From the 100% to the 50%, it is a discounted zone. From the 0 to the 50%, the upside, this is where we call it premium zone. Premium. Okay, I'll explain why. Let's say that I'll take example in the real life again. Let's say from the 100%, this actually, let's say $1,000. Okay, this is $1,000. Downside, it is $1,000. Let's say from this area it is 2,000. Okay, from this area is 2,000, and from this area up here, let's say it is 3,000. Let's say this one is 3,000. Okay, we're having this 3,000, 2,000, 2,000 here. Okay, and this 1,000. Let's say you want to buy an iPhone. The example I've been taking since. Let's say you are buying an iPhone, which is the red one. If you want to buy an iPhone, you'll have to buy it cheap, right? You can buy the iPhone at from 3,000 to 1,000 if they ask you to buy the iPhone, but it doesn't always have to be the 1,000. So maybe you can take the price between the 2,000 and the 1,000, which maybe might be something like 1,050. If I put it here, it might be 1,000. Let's say 1,030. Okay, 1,030. Let's say you are buying at 1,030 or 1,040. From the 1,000 to the 2,000, that's where you are looking to buy your iPhone. If price has to go above the 2,000 or the 3,000, then you can't buy it because it's too expensive for you to buy. So it's the same thing as Forex. This is the case you want to buy. The case you want to sell, as you bought, let's say you bought at 1,000 and 1,300. Now you want to sell. If you want to sell your iPhone, then you're going to sell it higher at the price you bought. Let's say you bought at 1,300. Maybe if you want to sell the same iPhone you bought, you might maybe sell at 2,700. Let's take this. Let's say you are selling at 2,700. Okay, you are selling at 2,700, which means you bought at 1,300. You are buying at the discounted price, which is the 1,000, and you are selling at a premium price, which is 2,000 at 3,000. So you are making some benefit. You buy lower and you sell higher, so you are making money. It's the same thing as Forex market. The way the market moves and the way institutions they trade. Let's say you have an expansion to the upside. The expansion to the upside is going to be, if you take your fib level, is going to be from the swing low to the swing high. Okay, this is actually the expansion to the upside. They bought from this 100%. Okay, and price went up, and now price will have to retrace, and once price retraces, then they will try to buy again. For them to buy again, then they will have to buy from a discounted area. Okay, or discounted price. If price has to only come to the 50% and go higher, then it's the same case as you are buying an iPhone at 2,000 instead of 1,000 and something. So price most of the time will retrace from the 62 or 70, 72, or these others from the 50 to the 100. If you have any OB or any zone that you are looking at, you can try to buy from one of these zones. Most of the time, price come to the 79. So price retraces to the 79, and now we'll have another rally to the upside, which will break this high. Once you are breaking this high, then we'll have another. Okay, you'll have to take the another fib from the swing low to the swing high, and it's the same case again. We'll retrace to a discounted zone before going higher again and again. Okay, this is how actually institution trade. They buy from a discounted zone and they sell from a premium zone. Selling, if you have, okay, this actually rally to the downside. If you're having a rally to the downside, we'll take the flip tool from the swing high to the swing low. Okay, we'll have something like this. Now price will have to retrace to one of these level, either this 85 or 79 or whatever. So price will have to retrace to any premium zone. Okay, once price retrace, then now we'll have another rally to the downside again and again. Okay, once you have another rally to the downside, we still having flip tool. Okay, we'll have a flip level in each expansion that you're having. This is actually how the market moves. Let's say you have a expansion, retracement, expansion, and retracement is like this, and expansion. Sometimes it happen to be like this. Okay, once you're having like this, you have this. We see that we only came to the 50%, we didn't even go to the 62. It happened, but for you to buy from this equilibrium zone, equilibrium is the 50%. Okay, if you want to buy from the equilibrium zone, you'll have to look for price to break structure to the upside. For them, this we broke structure to the upside, so I can easily look to buy from this area if I see some sort of confirmation on lower time frame. Okay, now let me get back to this. I'm back. Okay, let me, we have this impulse to the upside, this impulse from downside, from this level, I mean, well, okay, having an impulse from this one swing low to the swing high. Okay, what you'll have to do is you'll take your flip tool, from this level to this level. Okay, once you take it, you can see that price retrace to the 62. You can clearly see price retrace to the 62, and now we have another impulse. Once price retrace to the, price came to the 62, price retrace or impulse to the upside, we impulse and we broke structure again. This is the swing high. Now we came, we broke structure to the upside again. As we broke structure to the upside, we'll have to take the other again. Let me take, I can still take from this or I can take from this, doesn't matter. Let me take from this one to the swing high. You can see that price retrace to the 72. The, let me zoom well. If I put the box, price retrace to this one, which is the 72. Price always retrace to any fib level before going to the upside. If you are bullish, then you are retracing to any discounted zone. If you are bearish, then you are retracing to any premium zone. Let me try to see if I can get any example when price is going down. You have a swing high. Okay, you have this swing high to the swing low, which is this. Price retrace to the 50%, and if you look at the 50%, we still have a order block to take the sell there as well. Okay, this is the case where you take your order block based on the fib level. You can see we retraced to the 50 and now we went down. And if I come here again, we had the same thing. We have this, we retrace here, we retrace to the 62. If I see we retrace to the 62, if you go to any lower time frame, maybe you can get an OB there. That's the reason why price retraced to the 62, and now price had another rally to the downside. And if I, is there anything, and this thing works in any time frame. Let me just go to the 5 minute, you can still see it. Let me remove the replay mode. Okay, this actually, let me try to get back. I need expansion and retracement, something very, very well. Like, okay, let me take this. You have expansion. Okay, you have this expansion to the upside. Now you can see that price retrace to the 62, and the 62, when you look at it, you have a order block. Okay, that's the case where you take your buy based on the order block, and now price retrace to a discounted zone, and you have the order block there as well. So this is a buy opportunity. Now let me try to talk about how you, the case I just talked about right now, how to take the trade based on a order block, a fib level and an order block. Let's say you have this, you have expansion to the upside. Okay, retracement, expansion, you have something like this. But on your expansion, let's say that you have this. Okay, you have the order block here. You have let's say you have another order block here, and let's say you have another order block from this area. Let's say you have this. When I have something like this, or let me try to bring this one a bit up. Let's say I have something like this. All these are POIs. I can still change them, put POI blue. Okay, I have my POIs or my order blocks. I take the flip tool from the swing low to the swing high. Once I take it like this, I can see that the first one is at the, when we are at 100% of the flip tool, this is where we talk about the extreme zone. This is actually extreme demand zone. Extreme demand zone. Okay, This is actually the extreme zone here. So you're having an extreme zone, you're having another OB at the 72 and the 52, 72 and the 79, and you have the other OB which is above the discounted. It's not even a discounted zone. So what I'll do is this one I'll just ignore it. Even if price comes to it, then I'll not even look at it. I'll just remove it. And we have this and this. These are the one I'll be interested in. So when price will retrace to this one of this zone, okay, once price comes to this, I'll try to look and see if I can get any of like any lower time frame confirmation to take the buy to the upside. If I get the lower time frame confirmation, then I can take the buy based on. But if I don't get any lower time frame confirmation to take the buy from, then I'll just wait for it. Sometimes price will just come, do as if it's going well, but it didn't break structure to the upside. It's still creating lows and new lows and new lows. And we'll come to this area, and that's where we'll have the lower time frame confirmation and take the buy to the upside. So you'll always look for lower time frame confirmation when you have plenty OBs. But let's say you have two OBs. Two OBs, you can also split your risk. You can go 0.25 in the first OB and 0.25 in the second OB. What can happen is one trade might hit stop loss and one trade might not get triggered. Now, if I come here, this is the case I've talked about. If I open this, if I'm looking for OBs, I can see I have an OB here. Okay, you guys can see I have an OB order block actually. I have another order block here, and I also have another order block down here. You guys can see we have like three. Okay, we have like three order blocks. So what will happen is you don't just take your buy. If you want, let me take my fib tool first from the swing low to the swing high. If I take it like this, the first OB is at the 50 zone, which is the equilibrium zone. I don't really take the buy based on the equilibrium zone, so this one I'm just going to ignore it. If I want to take my buy, I can take based on the second one, which is this, or if I want, I can take based on this. So if you want, then you can split your risk based on these two, or if you don't want, then you can still look for any lower time frame confirmation. Let me see the 1 minute if I can get any sort of lower time frame confirmation. If you look at this I can talk of brick of structure. This one, this candle here. Okay, this I might talk of brick of structure. Brick of structure. Okay, and now price will have to retrace. You have this OB you can take the buy from, and seems like price came and mitigate this first OB. This might be a good entry, and another might be this. The same case we saw on higher time frame, we are seeing the same thing on lower time frame. This actually you're having two entries again. Each one you can enter with the two. Uh, this one actually, if you want more confirmation, maybe you will go to the second time frame, or if you want, you can still split your risk, or if you don't want, then you can still enter from the first one, which is here, and your stop loss is going to be below the last OB, which is this. Your risk is gonna divide your risk reward by 2 or 3. But if you don't see any confirmation entry, you don't take the buy based on it, because you might even come to the extreme zone, which is down there, and maybe you can take the buy based on this the case where you're taking the buy based on a OB to the upside, or a fib level. You are looking for a OB based on a fib level. If I come here, if I take this, I can see that you only have one OB, but I will still try. Swing low to the swing high. Okay, swing low to the swing high. You having what? Or this one is actually a case where the OB didn't get mitigate. You have the OB at the premium zone, which is up here, but price didn't come and mitigate it. It's still fine. Let us see if we can get any other opportunities. But let me look at this. I'll take the fib tool from the swing low to the swing high to the swing low, and you have the OB which is at the 62 and the 50. Actually, it's the 50. The 62 actually for me, as if I want to take the sell based on this, and I'm going to consider the 62, which is this one until this, and we see that price retraced to the premium zone and went down. And do you have any other example? It works on any time frame. Okay, you don't have to look for the best time frame to get it. Any time frame you can still get what's happening. Let me try to see if I can get any other. If I take this, I can see that you're having this swing low. Okay, swing high to the swing low. Okay, and now we have an OB. We have an OB at the 62. This 62. you can see that price retraced to the 62 and went down. This is the case where you are taking the sell based on a fib level and with the order block. You have your order block there. You have this order block. You have plenty, but if you go to any other time frame, you'll get it. Well, let's see the 1 hour, maybe the 2 or 3 hours, you'll get something. You have this, you can take the sell based on with a lower time frame confirmation, or if you want, you can take with risk entry, and you have another OB up here. Those OBs, when you want to take a buy or a sell, the OB that you are looking for has to line with any fib level. Like if it is the extreme, it doesn't matter. If you have an OB from this area, you don't have to look for the fib level. But if the OB is somewhere in the rally to the upside or to the downside, then you'll have to get your fib tool and you look for it. You can see this swing low to the swing high, and the swing low to the swing high has always to break structure to the upside or to the downside. Let's say this, we broke structure to the upside. You can see as we broke structure to the upside, let's see price retrace to the 79, which is this. If you look at it, you'll have a perfect OB there. You have an OB here, and price retrace to it before going up higher. And actually, one candle went to TP, and the TP is going to be the swing high or the swing low. Actually, for me, for OB to be valid, we'll have to break structure to any direction. If you have rally, retracement, okay. Once you are breaking structures to the upside, this is actually the bullish trend. So we are breaking structures to the upside. We had a break of structure. We had a break of structure. As we're having break of structures, then if I get any OB before the break of the structure, then I'm fine to take the buy on. Okay, this actually where the break of structure again, then I can take the buy on this, and again. Okay, retracement and rally, and again. As you are breaking structure, then I'm really to take like the buy based on a OB. Okay, and now the same case, if you are breaking structures to the downside, I'm happy to take the sell because we have a break of structure. As if I have an OB here and we broke structure to the downside, break of structure to the downside. As we broke structure to the downside, then I'm okay to take the sell based on the fib, based on actually the OB. This is actually what I do. This is the first rule. We'll have to break structure. The second rule, we'll have volume to increase. When I'm saying volume is increase, volume has to increase. Let's say you have this. You can see this huge candle. You have this some sort of doji, and after this we see huge candle, okay. When it is like this, then this doji for me is a valid OB. If you go to lower time frame, it might be an OB. Okay, as we are having volume has increased, we can clearly see that from this one price went up rapidly, then I'm ready to take the buy because this one might be a valid OB. Think as if like when institutions are buying, they buy with a lot of capital. As they are buying with a lot of capital, then we can see that the money they are putting into the market, the volume is too much, so it will affect the market. That's why we are having this huge candle, If only retail traders like us, if you want to buy or sell, it doesn't affect the market. This might be retail traders, but this might be small money. You're having this OB, you can see you have this OB, last sell candle before the up move, and you have this volume increase in the market, and maybe we even broke structure to the upside, or this one might even be a break of structure from this area. This one is a supply zone, but we failed the supply, so it might also be a break of structure. But for me to be happy to take the buy, I'll wait for this to be broken. If this is broken, then now we are turning bullish. And we can see that we broke it and we continue bullish. So once we have volume has increased into the market after the order block, then I'm okay to take. And this is the second rule, okay? And the same thing, if you are going down, let's say we are going down, we have this, we can see this the OB. This OB is valid. Why? Because we broke structure to the downside and volume has increased. You can see this candle. You see the way we came down, like it's very rapid compared to the way we went up. You can see that we went up correctively. When we went down, that was uh too fast. But if I see maybe the price come back yet, price might come back later. This one is a valid OB. So if you are trading Euro USD, there is a chance where it will come to this area before going lower. What might happen is we'll have something like this. Okay, we'll have something like this, tap into this, drop down, and now you are going continue bearish because we still bearish. So this what might happen. You get your OB, it has to break structure to the downside and volume must be increased. Like the candle has to be huge and everything. And any other rule for me to get an OB to be valid. I don't like seeing a lot of wicks in my OB. If I take this one is not a valid OB for me. From this, it's not no longer is no longer valid because since it's mitigated. This one we can see that price came, entered inside. Let's say, let me take this. We can see that price went up, came, mitigated, which is already mitigated, and now we went up. So this OB is no longer valid for me. If price came back, even give us some kind of wick there, I'm not okay to take the buy with or the sell, depending if it is a bullish OB or a bearish OB. Let me get back. We can see what happened. Price mitigated. Price came mitigated. And if I look at it again, we do have this OB is no longer valid because price came, mitigated, and went up. And this OB is no longer valid because price came, mitigated. We had a break of structure. This week is supposed to be a break of structure. And we went down, we mitigated, we went up. Now the only OB that might be valid for me is might be this one, the last one, because price just went up but didn't came to it. And we have this OB here. We can see this OB is already mitigated. We went up and we went down. We tap into it, we went up. What I mean is, when I'm saying mitigated already, is I don't want the OB, an OB. I don't want price to tap into like many times. We have rally, this one, this one. If price do something like this, then let me just put it like this. If you have an OB here, okay, if the OB is already mitigated, if price came tap into it already, then I put it as a valid PY for me. It's already validated or mitigated. And now if I have to look for an OB, this one is no longer valid, so I look for another OB from any of this area here, okay. Because if this one might still be a valid OB, then this one is going to be like a support zone already, because it's no longer an OB. It's going to be like a support zone. And support zone, when you have a lot of touches and it's already liquidity. I'll be making video about liquidity later, but when we have multiple touches on PY, it is actually like any support or resistance zone. When I'm saying I need volume to increase, let's say we are having this. You can see this, we have an OB, okay. Even this one is an OB, but this OB I don't like it because we can see that price went down correctively. We don't really have any volume increase into the market. We just came down the way correctively. This one is not a valid for OB for me. Volume must increase. And the other one is not compulsory, but it's also good. It's when we have a bit of imbalance to the OB, okay? And maybe liquidity. This one I will talk about perfect setup later. But when I'm saying talking about let me try to replay the market from this one is too much. Okay, let me try to bring to the 1 hour. Let's say from this or the 12, I don't know, 30 minutes. I only need an OB to illustrate my example with. Let me take this, or let me just look for a good one. Let me go to our time frame if I can get any OB. I'm looking for an OB that is already mitigated. Okay, let's have this. This one is actually the 8 hour. It will take me longer if I have to look for a perfect example, but let me take this. And okay, we have this OB, okay. Market came, tap into it. This one, market came, tap into it. We have this, market came, tap into this and went up, broke this high, so it's valid for me. This OB is valid because we broke structure to the upside. When I'm talking about breakout structure, I'm talking about this week. This one, but this one is valid because we have volume increase into the upside, and we have we have volume increase, okay. This one, volume increase to the upside, and we broke structure to the upside, and we do have some imbalances here. This one, this week to this one, I didn't make any video about imbalance yet, I think, but I'll make video about it. And this one, we do have some imbalance, so price came, tap into it before going up. Something about order block again, when you have week to week, it'll also an OB on lower time frame. What I mean is, you look at this, right? This one is an OB and it is mitigated. I'll try to replay market here, okay. Is an OB and it is mitigated. This is the 8 hour. But if I go to higher time frame, you'll just see a week, 2 weeks that is giving us this OB. Let me try to go. This one actually is still an OB for me. We do have this doji candle is an OB. Let me try to go to any time frame. Yeah, you look at this. This actually just a week. Okay, this is just a week. As we are just having a week, but on lower time frame it is an OB. If I go back to the 8 hour, we can see that it's an OB. We do have the OB here. But on higher time frame, on 12 hour or 14 hour, 12 hour 14, let me just go to the 15 hour. We can see that it's just a week. The week of the candle might be an OB on higher time frame, on lower time frame, sorry. The week of any candle might be an OB on lower time frame. If I come back to uh, if I come to this, we see this OB, right? We see this OB price came tab into it and now went to TP. Let me try to replay the market. I'll see this one is this one is the 15-hour time frame. Let me try to go to the D1. D1 is still something maybe okay, or yeah, we have some, we have a gap there, but let me see. You guys can see this is actually just a week, is the week of a candle on higher time frame, but on lower time frame it's just an OB to the downside. It's an OB, it's a bearish OB, okay. So for you to know if it is an OB or not, you can still go to lower time frame. If you see any week the price coming to, you can go to lower time frame, look for it, you'll get your OB there. Okay, let me replay the market here. And let me go to let me try to see the 3 hour or 3 days. This is what I see on the 3 day. On the 3 day, seem like this OB is already mitigated. Okay, this one mitigated by this week, but price came, went up and dropped down. So it might be another OB that price came to mitigate, not this OB. We have this whole OB on higher time frame. On lower time frame, we have many OBs there, and you have to look for the one that it is good, and you'll take this sell based on. This is a three days. Let me go to the 2 days. If I can get any OB, these 2 days, I don't see anything. Let me go to the 1 day. This is the 1 day. If now I go to the 1 day, I can see that I'm having this OB. Okay, I refine my OB on lower time frame. Actually, D1 is lower time frame compared to D2 or D3. So price came, tab into this and drop down. But if I still scroll maybe to lower time frame, I can still get others OB there. If I come here, seems we have this OB. Let me see if price came to mitigate this or not. Seems like price came to mitigate this. Let me try to put it well. Okay, you can see this OB is valid because we didn't even mitigate it here. Price came closer, but we didn't mitigate it. And this is how I define my OB on lower time frame. This is actually D1 OB, but I refine to the 4 hour. I define this OB on 4 hour, and if I see price can tap into it before dropping down. And not only this, if I want, I can still refine it. Let me go to the 1 hour if I can get anything. 1 hour, we have another OB. I don't know if this one is. Let's see. We can see that price came and mitigated the 1 hour OB exactly. The OB we found it on the D1 or the 24 hour. Okay, we found it on the 24 hour, but we refined the OB on lower time frame by just scrolling between time frames to time frames to get the lower time frame, and now we got the H1 OB. And this H1 OB is very valid for me. The way is why I'm saying valid is we have this OB broke structure to the downside. We have this structure which is broken, and now we do have imbalance left here. Imbalance this week to this week, actually the space between them, that is this is the imbalance. I'll make the video about this, don't worry. So this one the imbalance, so we have imbalance, volume increasing to the market, broke structure to the downside, we did mitigate it. So this OB is valid. This one is not valid because it seems like price came down and came back to mitigate it. So this one is no longer valid, but this OB is valid for me. And not only this, if I can talk of liquidity, seems like price creating some sort of highs. Okay, this might be liquidity. We do have a bit of liquidity as well, so this OB is very valid for me to take the sell from. So I've refined my OB, the D1, but I've refined from the 1 hour. If you want, you can directly take the sell from this to look like this. Your stop loss is going to be above the H1 OB, look like this. And now your TP, you're going to target the swing low, the higher time frame swing low, which is the one down here. You'll have to target this. So this is actually 1 to 30, and let's see if it has played or not. Not yet. And that's where emotion come into play. When the thing went almost to TP and is retracing back, then people are getting afraid and now they are closing their trade. But it's still with TP. With final TP. You guys can see with final TP. And this is actually 1 to 30. And the reason I'm taking my full TP on this string low is because when you think as the market structure bearish trend, you're creating low, you'll have to break this low again and again. So when you take the sell based on any order block, your full TP is always going to be the swing low. As we are going to take this low, then your TP is going to be the swing low again and again. This is just market structure. It's very important. Even if you know OBs, you still have to know market structure for you to know when to get out of your trade. And we can see that we are bearish on D1. Okay, we're having this one, and we're having this, having this, and now for sure we'll have to break this low. This actually D1 OB, but you refine from the 1 hour to be able to take the sell with, and you got the 30 hour. And this actually all about this video. You can, what I taught you here, you can easily rewatch the video if you don't get some stuff, or you can easily ask me any question in the Discord chat. If you have any, if you have a lot of OBs, you can get the refined OB on lower time frame. Or if you have a lot of OBs, you can get the right one using the fib tool. If you have a big OB and you are looking to refine, you can go to lower time frame to refine as the one we did here. And this is actually all about order block. And there's also something I want to say. Sometimes if you refine your OB too much, it might not be mitigated. Like price doesn't always mitigate the lower time frame OB. It might just mitigate the higher time frame like this. You can see that from this. If you take the D1 OB, seems like price mitigated the D1, or was it a D3 or D3? It might be a D2 or D3. Price mitigated this one already, but didn't mitigate the D1 and went to TP, or the H1 went to TP and came back to mitigate it again. So you have situation where price doesn't mitigate the OB or the refined OB. It happened and it's normal. If it doesn't mitigate your zone, then you just wait. You wait, you get others opportunity plenty.